Hello everyone, welcome to my channel. Guys, Terra projects band together in migration to Polygon ecosystem. Projects formerly running on the fallen Terra blockchain have collaborated to help each other migrate over to the Polygon Layer 2 network. Don't forget to like the video, subscribe to my channel and turn on the notification bell before going into the details. I used special indicators in the chart for you. You will get 90% accurate results. Watch the video till the end without skipping. More than 48 different crypto projects formerly based on the failed Terra ecosystem have found a resurgence by migrating over to Polygon. Polygon Studios CEO Ryan Wyatt expressed delight at his network's ability to onboard many projects to the ecosystem in a July 9 tweet. He hinted that Polygon's multi-million-dollar Terra developer fund has been effective in attracting the talent that was unexpectedly flung into limbo when Terra collapsed in May. Polygon is a network that serves as a Layer 2 scaling solution for the Ethereum network. Among the higher-profile projects to move to Polygon are the Luniverse Metaverse platform, the One Planet NFT marketplace, and the Derby Stars play-to-earn game. One Planet has been instrumental in helping other NFT projects migrate to Polygon. It has become a platform dedicated to assisting NFT projects from Terra with its ARC*1 initiative. OnePlant's July 9 blog post outlines how ARC*1 has helped a total of 48 NFT projects, encompassing 90 NFT collections, port over to Polygon. This represents a large proportion of Terra projects, including some that did not launch on One Planet before the cataclysmic DePeg event. Since June 15, ARC*1 has reduced the support it provides to aspiring projects, but the team says it will still provide technical support for projects who want to migrate from Terra, and allow projects to launch on Polygon using its launchpad. Polygon appears to have been more successful at attracting Terra projects than the VeChain ecosystem. So far, it does not appear that many Terra projects have made the move to the Layer 1 ecosystem despite VeChain openly welcoming Terra developers to apply for a grant. The Terra ecosystem suffered a monumental collapse in May when its Terra USD stablecoin lost its peg, forcing its native token Luna to crash nearly 100% in value from over $60 to fractions of a cent. The network has been renamed Terra Classic, and its native token now has the LUNC ticker, while a new iteration has adopted the Terra name and Luna ticker. It has yet to gain much traction or confidence as the crypto bear market deepens. After Terra's fall to earth, get ready for the stablecoin era. Did May's algorithmic stablecoin crashes kill the concept? Or is there still a role for fiat-pegged cryptocurrencies? Stablecoins were supposed to be the boring uncle of the crypto world, safe, sensible and dull. They're probably not what Satoshi Nakamoto had in mind, but they're supposed to be a reassuring haven of calm and utility away from the turbulence of pure-play cryptocurrencies. With values pegged to fiat currencies, stablecoins were intended to be useful rather than to offer get-rich-quick schemes. They play an important role in the cryptocurrency ecosystem by providing a safer place to store capital without having to cash out entirely, and allowing assets to be denominated in fiat currencies rather than volatile tokens. However, events in May demonstrated that crypto stability is still elusive. With governments slow to react, Terra's Luna token, which has since been renamed Luna Classic, dropped to close to zero in value, wiping out $60 billion along the way. The obvious conclusion would be that the stablecoin experiment has failed, but I believe Terra's fall to earth is the precursor to a new era where stablecoins will become established, accepted and beneficial components of the global economic system. And the regulation that is only now dropping into place already looks well past its sell-by date. Not all stablecoins were born equal. If that seems unlikely right now, the failure of a few stablecoins does not write off the entire concept. Other stablecoins have been constructed on solid ground and are performing as expected. What's happening is a clear-out of the algorithmic stablecoins. These are coins that were never fit for purpose because they were built on insecure foundations. There were always critics. Some called out Terra as a Ponzi scheme and argued that it, and other algorithmics, would only hold value if more and more people bought them. Algorithmic stablecoins are unregulated and not backed by equivalent amounts of the underlying fiat currency, or by anything, for that matter. Instead, they deploy smart contracts to create or destroy the available supply of tokens to adjust the price. It's a system that worked, backed up by an artificially high interest-paying mechanism called Anchor, while enough people believed in it. Once that trust started to evaporate in early May, The floodgates opened in a classic, old-world bank run. The move started during U.S. trading hours on Thursday as equities rallied strongly, and the risk-on theme dominated in several asset classes. Now sentiment has changed. Luna price has pulled back and there is a risk of a full collapse back to 0.97 for a loss of over 10%. Luna price at risk of paring back incurred gains from Thursday. Terra price has been printing solid gains since the start of July, with a gain of over 17% booked in total. Thus far, the good news for Luna price action is that it was in dire need of some relief after the battering it took in the first half year of 2022. Technically, it all made sense with excellent support at 0.95 or the 23.6% Fibonacci level, holding quite well, and then a steamroller rally up towards 112, or the 78.6% Fibonacci level, and all on the back of dollar strength. Luna price, however, sees a fade unfolding this morning in the European session, which could spell trouble. Bulls will not bother buying below 107, for example, at the 61.8% Fibonacci level, and will instead want to wait for a lower level to re-enter the rally. This makes the steep rally unsustainable and could trigger a full paring back towards 1000 near the 38.2% Fibonacci level, or support along the green ascending trendline near 0.98. As already mentioned above, a few Fibonacci levels are set up to be quite interesting. Certainly, the 107 level at 61.8% is key, bolstered by the fact it is where the market performed an evening gap between the close of one candle and the open of the next candle. A brief dip below the 61.8% Fibonacci level could fill that gap and be used as an entry point for bulls to rally up to the next target at 115, which is a very technical level going forward. Fed Vice Chair calls for more crypto regulation, notes Terra collapse. Crypto does not yet pose a systemic risk, but now is the time to ensure that it doesn't happen, says the Fed's Lael Brainard. The Federal Reserve Vice Chair today called on greater crypto regulation, noting that many investors have recently suffered significant losses. In a Friday speech at the Bank of England conference in London, U.S. Central Bank Governor Lael Brainard noted that the crypto market is not yet big enough to pose a systemic risk to the traditional financial system. But she added that now was the time to ensure the regulatory perimeter encompasses crypto finance. We are closely monitoring recent events where risks in the system have crystallized and many crypto investors have suffered losses, said Brainard. Despite significant investor losses, the crypto financial system does not yet appear to be so large or so interconnected with the traditional financial system as to pose a systemic risk. This is the right time to establish which crypto activities are permissible for regulated entities and under what constraints so that spillovers to the core financial system remain well contained, she added. Brainard referred to Bitcoin's plunge. The biggest cryptocurrency by market cap is down 68.5% from its November 2021 all-time high of $69,044.77, and mentioned the collapse of blockchain network Terra. Thanks for watching. Don't forget to like the video and subscribe to my channel. See you in the next video.